The IMF this week cut its growth forecast for the global economy again. Which way are we headed, and when might the global malaise finally be behind us? We were very fortunate today to have IMF Chief Economist Olivier Blanchard on the MoneyBeat show to talk about this sort of confounding global picture. Olivier, and thank you, and welcome to the show today. Glad you're coming here today. You know, it is sort of a confounding picture, and you guys, you cut your growth forecasts again this week. What do you see as, it seems like there's really kind of a big weight hampering the economy. What do you see going on?
I mean, you have to realize this is the mother of all crises, right? So the way out is far from obvious. You have policies we've never tried. You have a banking system, a financial system, which took big hits. You have regulation coming in. Banks don't quite know how to handle it. So there's going to be a lot of uncertainty along the way. In terms of revisions of forecasts, we always revise one way or the other. Right. We never get it right. The revision, I think, is relatively small this time. I don't see big news in most of the revisions, except probably for emerging market countries, where there we have revised down. For the rest, actually, it's not so bad. I mean, it's relatively stable as these things go.
Right. Yeah, it's interesting because today you have markets rallying here in New York. The Dow's up. Ben Bernanke, Fed chairman, yesterday gave a speech, sounded sort of dovish, so the markets are rallying. You see the Dow up 100 points right now. Do you think, the big policy weapon is quantitative easing from the central banks, right? Do you think that the markets are reading more into quantitative easing and sort of panacea it can be than what the reality is?
I think one has to be realistic. I mean, quantitative easing is what you do when you can't use the policy rate. Policy rate in the old days really worked. You knew how it worked. Communications was good. They had 15 years to kind of get it exactly right. This is a tool which works when the other one can't be used. I don't think it does amazing things. It helps. But it is not a magic weapon. And then the communication is much harder because, it hasn't been used before. So Bernanke has to exactly see how the markets react, and then the markets have to learn. And so we're going to get days like this. Bernanke smiled. Markets are happy.
Yeah, it's interesting, excuse me, because the Fed over the last month or so has been talking about winding down the quantitative easing, and that's why rates have risen so much. And that really has hurt the emerging markets. And it's interesting, right, to see things that happen in Washington, D.C. can affect.
Well, look, I mean, investors are thinking about, do I put my money in the U.S. or do I put it in Indonesia, right? And so when the U.S. looks a little better, well, they say, well, let's go back. So you're going to get these movements. I think there was a lot of volatility coming from just repricing and realizing that quantitative easing would come to an end. I think we'll see less of this. But you're going to see some capital flowing back to the US and hopefully to Europe one day when they do better.
China has had some issues lately, right? They had sort of a liquidity squeeze. The economy is slowing down there. How concerned are you about a hard landing in China?
I think hard landing, probably not. I mean, I think the policymakers have a tough choice, right? And basically, they've done too much investment. They want to tune it down. They would love consumption to increase, but it doesn't happen overnight. So they also don't want to get a big credit bubble or anything like this. So they're trying, right? I think what may happen is that growth will be a bit lower than our baseline, but it's quite possible. We already revised by about 0.3% for the year or something like that. Could be worse, but they're not going to let growth go down very much. I mean, they have the tools to basically push things. They have fiscal space. They'll use it. So it's possible it will be a bit worse than what we said, but I don't expect a really hard landing.
In the sort of post-recession and then in the recession era, the idea was, sort of global idea was that China is going to be the big growth engine. The emerging market is going to be the big growth engine. If that's slowing down, is there anything that you see right now that can sort of take up that slack?
No. I mean, if China or the other emerging market economies grow more slowly, it will have an impact on advanced economies. We did an interesting simulation, computation at the fund, which is that if growth in emerging markets was about 2% less than what we predict, what would be the effect on the US? It would be about 0.5%. So we care about what they do. I mean, this is a globalized world, right? Yeah. And it would have an effect.
How far along is Europe in resolving their debt crisis, and do you think they're moving fast enough? So, I mean, you look at Spain, Portugal, they have some political issues going on. Greece, the economy is still bad. I mean, is Europe moving fast enough?
I wish they move faster, but getting common institutions and progress with either 27, now 28, or 17 countries is tough. But we have to keep pushing them because they cannot get out of the hole without doing more. It's happening. There are signs of progress. I mean, the periphery countries are exporting more. That's good, but internal demand is very weak, so they have negative growth. Right. It's a tough slog, and they need to do more.
Okay, Olivier Blanchard, IMF Chief Economist, thank you very much for coming in today. I really appreciate it.
It was great.